Welcome to the Business Finance Matters podcast. Over the next 15 minutes, we're going to tackle some of the topics that we get asked about on a regular basis so you business owners can get a better understanding of what it is that you're probably dealing with on a day-to-day basis. Let's get on with it.
Well, Dave, we promised change, and here it is.
Can't get more of a change than this, eh?
I don't know if we're going to turn them on or frighten them off, mate, but here we go. So, Finance at 15.
Yes.
I think this one is really a good place to kick off. We're going to talk about what is a business finance intermediary, what it is, what it does. So, what do you think?
Gosh, we're speaking to the right person. I mean, first of all, the intermediary comes in from my background, having been an intermediary since 2010, other words used, brokers. That's probably the most common terminology used in our industry. What is a broker? I think as far as I'm concerned, as far as the Guild of Business Finance Professionals are concerned, an intermediary is ideally exactly what a company like ours does, is a business finance professional.
Okay.
What I mean by that is that we have certain skill sets, obviously a huge amount of experience. We have an attitude to how we're going to help business owners, which is the primary cause.
Sure.
This is principally driven by helping business owners gain access, not just to any type of finance, but the best fit finance. And that process is easier said than done in some cases. I mean, there are a number of intermediary stroke brokers that work through the digital processes, which we know about and arguably don't like. But there are people like guild members who, like myself, have come from a background of training, education and experience, which basically means that we would have an understanding of what the business owner, first of all, is looking for. And then we get into that process of understanding how we're going to get the access to finance that they need.
So cutting to the chase then, I mean, why wouldn't a business go straight to a lender? I mean, why bother?
That's a good question. And I would argue that sort of, before the banking crash in 2008, that was probably how most business owners did gain access to finance. And why not? Back in those days, the banks were out there lending, whether it was typical overdraft, whether it was loan. More importantly, there was a bank manager of some description. Once that banking crash happened, as a result of that, the market changed. Certainly in this country, it changed.
Yeah.
I mean, we zoom forward to 2025 and we are, 300 odd lenders in the marketplace now. And all the products that are offered are wide and varied. And the answer to the question is, why shouldn't business owners go direct to lenders? Well, even us as intermediaries, business finance professionals, understanding the market, understanding the different type of lenders, the landscape, the different types of interest charges that are levied, the terms. I mean, it is a minefield. I always use the comparison to the IFA marketplace, the independent financial advisory market space. So, for example, I heard the other day that there are over 100 mortgages in the marketplace at the moment. Now, for me as an individual, if I was going to go for a mortgage, I probably wouldn't. I like to think I wouldn't walk into my nearby bank and say, I need a mortgage, please. I would go to the IFA. They know the market better than I do.
Yeah.
In our space, it's exactly the same. And when a business owner is looking for something, might not even need finance, but there is some kind of, there's an attitude to looking at how the business may need to gain access to finance, whether it's now or later. But coming directly through someone like myself is by far the best way of gaining access to the right finance.
Okay, so an intermediary, it says what it does on the tin by the sounds of it. So would it be fair to say that, larger companies, corporations, etc., probably don't need an intermediary? They've got a finance team and probably a treasurer or something. So are we talking more about SMEs, small to medium-sized companies?
That's a good question. I mean, SME... SME does cover a wide, what's 5.5 million businesses in the country at the moment, give or take. I think it's fair to say that the S part of the SME analogy is the fairest one. I mean, I'm working with some companies at the moment that you would argue are on that border of sort of small and medium, and they don't potentially have that FD type of individual that has his finger or has her finger on the pulse of gaining access to finance. I would say typically, sort of businesses around 5 million and below would be the sort of businesses that most of us will be dealing with on a regular basis.
Okay.
But that doesn't mean to say that businesses of a higher value, into that medium size may also benefit from coming through someone like us. And do you know why? Because they're probably so familiar with the bank or with their traditional type of finance that they haven't looked outside, because the range now is big.
Yeah, I mean, I get that. I mean, I can see the benefits. I can understand the benefits. I mean, obviously, you are a knowledgeable individual. You know the range of lenders and all the rest of it. Are there any disadvantages, do you think? I mean, how does an intermediary, for example, earn its income? Because I presume you're all independent. You're not being necessarily paid a salary per se. I mean, there's obviously fees or commissions or whatever it is. How does that work?
Because the marketplace, great question. The marketplace is going through change, and there is a lot of comment coming through the marketplace of how organisations like mine or guild members earn their money. It's a great question to ask, because ultimately we're not doing it for charity.
Yeah.
I wish I could, but unfortunately on these
Charity.
occasions, charity. But I think ultimately the lender that we work with typically would have a fee structure built in to make sure that organisations like us will gain some kind of reward for that. And I use the word reward as in the fact that they recognise that we brought the business to them, and therefore they will pay us a fee.
Yeah.
That fee is always disclosed to the business owner, to the customer, so that there's no dishonesty here. Everybody knows what's going on from start to finish. There are arguments to say that there are some brokers, let's call them brokers for now, that aren't being necessarily, I think dishonest is the wrong word, but that perhaps are taking higher fees than they should be.
Yeah.
I mean, everybody knows roughly how much we should be charging for the work that we do.
Yeah.
And it's the same with any trade. If you're going over to mend Mrs. Miggins' fence next door, you'll know it's going to take 3 hours to do, and three hours.
Is that the same Mrs. Miggins that owns the pie shop?
Same Mrs. Miggins that owns the pie shop.
I remember her well.
But
nice
you
pies.
know that will take you 3 hours,
and
that's going to cost me about £50 an hour of my time.
Yeah.
So an estimate goes in.
Yeah.
And we're the same. I know roughly how long it's going to take me to do a particular job, depending on the business owner. So each business is so different, and each business requirement is so different.
And I suppose that the business owner doesn't have to work with you. You're just giving them an option.
In fact, one of the things we're saying in the marketplace right now to lenders, at least give them a recommendation that gain access to finance through some kind of guidance, some kind of business finance professional pathway.
Yeah.
Now, if they take that pathway, they hear that recommendation, which I think is a sensible way of any lender working, and they decide, you know what, appreciate the time you've given, because most of that is free of charge, is what we do. And they want to go direct, That's
Do you
fine.
know what? I've just thought of something. If you're then using your knowledge and your skills to place the right, shall we say, customer with whatever lender, surely there's an advantage there for the lender as well, isn't there? Because they're only getting potential opportunities that they're happy with, aren't they? They're not getting, I would imagine if everybody's, fighting right, left and centre and going direct, there's no filter, is there?
It's a shame we only got 15 minutes, because I could go on for a long time about this. But in short, yes. I mean, if I was a lender, and I have worked on that side as you have, to receive an application on behalf of a business through a business finance professional, honestly, you pretty much know 9 times out of 10 that that's going to be an application that's got all the information that you need to make that initial decision. And more importantly, to enable the lender to go to credit and to get the finance that's been requested. And the timescales involved with that are usually a lot shorter as well.
Yeah.
And ultimately, the journey of the application to the ultimate, to the final lend is what everyone wants to achieve.
Yeah.
Now, if you've got the application in and you go through all that time and it gets to the point of getting to credit and it gets declined for whatever reason, all that time that's been lost, it's got to have some effect on the business model of any lender, surely.
And there's another thing as well that strikes me, and I know this because obviously, as you say, I've worked in the industry, you work in the industry, although I'm not an intermediary, I've got a lot of experience. Let's be straight, Dave, there's no regulation in the business-to-business finance market. And anybody could literally set up shop tomorrow. There's no qualifications either. So that sort of leads me briefly to talk about how do you sort the wheat from the chaff. And of course, you know, we have to show our hand here. You know, we founded the Guild of Business Finance Professionals last year. Just explain to me a little bit about what that's all about.
There was, I think, a lot going on in the marketplace. I know you and I used to talk about this before the Guild was formed. I think one of the challenges was exactly that. There's no regulation, which meant that there were, and we were aware of individuals or organisations coming to market without that experience, without that level of training, without that focus on making sure that the most important part of this process is the business owner.
Yeah.
And because of that, and because there was no other body in the marketplace representing those best practices, for want of a better word, we decided eventually, we got round to it, didn't we, to form the Guild of Business Finance Professionals for that very reason. Yeah. To make sure that every lender / every business owner knows that if you come through a member that's part of this organisation, you know you're dealing with a business finance professional, someone that will always make sure that the most important part of this process is the business, and not what fees are being taken, not what lender you're working with, not what product is going to be pushed in there. It's best fit. It's, you know, whatever the outcome is, it's got to be for the best fit. It's got to be the best outcome for the business owner. It's
almost self-policing, isn't it? It's almost putting
it is.
You know, policing the
self-regulation.
Market. Yeah, and that's got to be a good thing. All right, Dave, I'm mindful that time's moving on. We want to wrap these up in 15 minutes. So in summary, I suppose what we're saying here is there is a body of people out there. There is a network of people out there. Let's face it, you know, the sandwich shop owner, the small manufacturer, you know, working in the light industrial estate, they're not business finance professionals. They're not dealing with loans and leases and all sorts of whatever. But there are people out there that can help them. That's what we're talking about, really, isn't there?
And our biggest challenge is one of the reasons why we do these podcasts is to make sure business owners know where we are. Yeah. Signposting for myself and for the Guild is not great. We're doing what we can to make that signposting as high as we can. But you're absolutely right. And what we want is for business owners, wherever they are, whatever time of day it is, to know that there is someone out there that can provide the assistance that they need.
Yeah, that's good. No. And how do we find those people? Can you remember?
You tell me.
Yeah, I knew you couldn't remember, you rascal. So bfpguild.org is the website. Got all the, you can search for your local, just like the IFA network you were talking about, probably slightly smaller at the moment, but we're growing. So bfpguild.org, that's the best way to find it. And if you want to get in touch with us, our brand new email address, Dave, which you can't remember again because you're useless, podcast@bfpguild.org.
Exactly.
So should we wrap it up there then?
Thanks,
you
Trev.
happy with that? Good to
happy.
see you, mate. Literally see you. Blimey. All right. Let's hope it goes well.
Okay. Cheers.
All right. Take care.
Thanks for joining us on this podcast. We hope it was useful. Please share, please subscribe so we can share this content to as many business owners as we possibly can. And if there was anything we haven't covered in this particular episode, then please let us know. Drop us a line. We'll be happy to talk about it in future episodes. Thanks again.